The market is hitting new all-time highs, but market breadth continues to get weaker and weaker and weaker, meaning less and less stocks are pushing up this trend higher and higher. And that gives me a lot of pause. So much so that I've been sitting in cash, not effing up my portfolio, following my plan. And we're going to go through part of that plan today and a few enhancements on that. So, Joe, does that sound like you're in the right place?
We are all in the right place here as outliers.
No, that sounds good, dude. Yeah, I was just taking a look at this, right? So S&P pushing new all-time highs. I believe the Qs are pushing new all-time highs as well, which is great. We're going to talk about more on the Qs in just a little bit. But man, this makes me nervous as all get out, right? We've got 1, 2, 3 stocks up today, bigly. The rest of the market, it looks pretty weak.
Yeah, well,
And
it looks very weak, and when I want to get in, I want to see an awful lot more green than what we're seeing here.
because a rising market lifts all ships, right? It pushes everything up higher. What I want to take a look at is breadth. Dude, breadth has been going down and it's still continuing to go down and down and down. Like you couldn't get me to buy the market with your money. That's how I feel about it right now. And a lot of people are probably looking at this like, God, this guy, he's not a trade. Listen, I've gotten all the comments for years at this point. I know what they're going to say. He doesn't know how to trade. He's such an idiot. I've made so much money, blah, blah, blah. You do you, brew. I'm going to do my own plan. So let's look at the plan, in fact. So here's the plans. Now, we've been working extensively for the last few weeks coming up with very exceptionally profitable plans, which I will be using live here on YouTube to go win the US Investing Championship in 2026. This is not a drill. This is the big time, okay? This is like walking up into the NBA. We're going to win the championship. That's the plan. So, when to use each plan. First, Plan M. This is our most profitable plan, but probably the least setupable one, I guess you could say. When there are, and you could take this when there are setups even up to 5 trading days old, which is cool. So we get lots of second chance signals to come through as well. Plan A is an incredibly profitable plan, but not as profitable as Plan M. And we would only take Plan A if there's no setups for Plan M. Plan ETF is probably going to be the second most common plan because this is when you've got extra cash that you aren't in a trade. However, you don't have any setups at the moment, right? So we could look at Plan ETF, and we'll look at that a little bit today because I've been working on that one as well. And then there's Plan Sit in Cash and Don't F Up Your Portfolio. And it's going to be the most common plan by far. When nothing else is there, you don't want to F up your portfolio, do you, Joe?
No, nope. Only put your money at risk when the market's telling you to put it at risk. And right now, with that concentration, it doesn't feel right for me.
You know what? Rick has a great point. So Rick is looking at the SPY heat map. Let's go to the SPY and let's all look at what Rick's looking at together. So the SPY heat map, so the heat map of the index versus the average score of the index. Let me zoom in just a little bit to the 3-month part. So the heat map means that the index itself is getting more and more greedy. However, the average fear and greed of everybody inside the index is going a different direction. So everybody inside the index is getting, on average, more and more fearful, where the index itself is getting more greedy. And because it's a market cap weighted index, and it's just a few names that are the big market cap movers, it's almost like Rick knows what he's talking about. Nice job, Rick. Everybody put Rick in the chat to pay respects to Rick. Very, very nice observation. We don't want that, right? We want to have the constituents, everybody inside the market getting stronger, as well as the market getting stronger. That is a broad-based rally where you can make all kinds of dollars, masters of the universe kind of money. That's what I'm talking about. Great observation, Rick. Really appreciate you there. So let's go through Plan M, and then we'll continue on. Look at this beautiful PowerPoint deck. I love it. So here on this slide, let me add this, make it a little bit bigger. There we go. Here on this slide, what's highlighted in blue is parts that are not in Outlier 9. Outlier 9 is the 9 itty-bitty baby steps to analyze any stock. However, there's a couple little nuances that if you are actually going to put on a trade, you might want to take a look at. So we want to see the bullish trend of the market, which we have right now, a buy signal on the market, and full stocks breadth, which we don't have. So if we look over here, it does the Outlier 9 for us. So we do have the trend, we do have the buy signal, but the breadth of the market, as we've talked about, is getting worse and worse. That would stop me in my tracks right there. The SPY fear and greed heat map like I said, continues to rise. It's back over 70. Another reason why I wouldn't be trading. So plan M is done. Plan M is done in the water right there. Don't have to go any further. But let's go into the sectors just a little bit because I did make a couple changes. Forgive me because somebody suggested this in the Discord last week. I thought it was brilliant. Rather than AS1, active scenario 1, active scenario 2, why not call it outlier channel M1S1 or outlier channel M2? Because that's what it is. M1S1, Joe, you can probably remember that means at least one on the market and at least one in the sector. That's pretty easy to remember.
Absolutely. That's a nice little change there. I like that. Good job.
Forgive me. I'd love to give you credit. I just don't remember who said it. It's a brilliant way to describe the outlier channels. What are the outlier channels? So when you go into the market breadth, it'll show you. Oh, Kostya suggested it. Kostya, well done, my friend. I like it. I like it a lot. Down here at the bottom, it actually shows you when we're getting more uptrends and less downtrends, and they get highlighted green or red. When we have the opposite, or it's going flat, it goes gray. We don't want that. We want more uptrends. We want less downtrends. Again, a very strong, healthy, broad-based rally will have exactly that. More uptrends, less downtrends, and bullish crossover. We don't have any of that, Joe. Like I'm telling you, now is not the time to be trading. I know it looks so alluring. I know the FOMO's running rampant. And I know the YouTube comments are going to call me all kinds of names. You do you. It's fine. I'm going to do me, and I'm going to follow my plan, and I'm going to win the U.S. Investing Championship next year in the options and enhanced growth division. And by all means, if you want to compete against me, let's do this. We'll go head to head. All right. I'll take on anybody. I ain't scared, not even a little bit. But the market's going to go up to new all-time highs today. Good for it. You know, Joe, it could be a little bit concerning to somebody who is trying to trade plan ETF because maybe it's too overbought, right? How do we know when things are getting too high, too aggressive, too fast? Well, if you're going to run plan ETF, we would start with the Qs, actually. Qs take precedence over the S&Ps because they actually, I did throw down the gauntlet. Dude, how else am I going to win the U.S. Investing Championship if I don't challenge the entire world? Do it. Bring it. I ain't scared. I am not scared in the least. Nope. I'm bringing home the trophy. It's going to happen. So, uptrend in the Qs. We've got that. Let's confirm that. Right, 10 over 20, price over 50. Looks beautiful. Next, the Q's having a buy signal. Let's go check that out real quick. Yep, Q's have a buy signal. Looks good. The Q heat map needs to be less than 70. So let's pop into Q's and take a look at this. And Steve, we're getting to this question here in just a moment. All right, so we have the heat map moving up. Still under 70, 66.88. So that looks good. So boom, boom, boom. Now, here's the part that I've been losing a lot of sleep over this, Joe. So this is something I've had in the back of my mind. We want to see it less than 2 ATRs above the 20 EMA. Now, why? So this actually goes back to one of my friends, one of Steve Burns' friends that he connected me with. God, I can't remember his name off the top of my head. He is like an ultra gazillionaire. He actually invented, you can believe this, the xylitol sweetener that goes in like all chewing gum. He invented that.
Oh, wow.
So, Steve, God, what is his name? And his dad, he claims his dad is DB Cooper. Who was that? What's his name? I cannot remember his name.
Did you just say his dad is DB Cooper?
He claims that his dad is DB Cooper.
Oh,
he claims,
wow.
the guy who disappeared after he hijacked an airplane. Yeah, I cannot remember his name off the top of my head. Anyway, this is something that he and I worked on ages ago, but it made a lot of sense to me. And so I got to thinking more about it over the weekend. I'm like, okay, so he uses I feel like it was the 20 EMA, and then he sets different ATR levels above or below that. If you want to do the same, it's called a Keltner channel. But for this, I don't want to add any indicators. I don't want to confuse anybody. So what I did was I worked on building an indicator. But what I'm trying to tell you is I built it just for outliers. I do need to make a couple modifications to it, but I'm calling it the value zone. And this is exactly where I got it from. Was that guy, I cannot remember his name. Hang on. hang on. I'm gonna figure this out. It's DB Cooper trader. Why can I not remember his name? He was one of my friends. We talked for ages. Yeah, let me look at my inbox real quick. So I remember emailing him about DB Cooper one day. Sent DB Cooper. Greg Gossett. Greg Gossett. See if I can find him real quick. Greg Gossett, a trader. That's Greg. There it is. So Greg is a good dude. You can probably find there's pictures of me and Greg right there. How about that? So talking about specifically exactly what we're talking about here today, which is that is so funny. Like literally the very first picture that comes up on here is me and Greg talking about specifically exactly setting different value zones based on ATRs above certain limits. Senior Wahoo also thought his name was DB Cooper. That makes him the Mini Cooper. I like that. Okay. So what this indicator does is it highlights for you, makes it as easy as possible to know when price is above the 20 EMA, yet below 2 ATRs above the 20 EMA. Now, there are times like right here, which Scott had in his back test, would have been a signal he would have taken. And you wouldn't have taken it. You would have absolutely skipped over it. Now,
this
why?
Is cool.
I know, right? This is really cool. The objective here was if we have like this one right here, which went from April to August, this one right here was 97 days long. During that, the Qs went up 18%. During that time, TQs went up 59%, Joe. 50-9%. Instead of sitting in cash, you could sit in TQs and do the best ever. Good luck beating me in the US Investing Championship. That's all I got to say. So, looking at this, okay, where's the best time to get in? Anywhere could have been a great time, but of course, there are times when it might have been overbought and then it went sideways for how long was that? From May 13th to June 2nd, right? So, you don't want to buy it when it's super extended. But you could even buy it on a pullback as long as it's above the 20 period EMA. And then a couple times it got overextended right here, a little pullback, right? So there's all kinds of different times you could get in, is what I'm trying to say. Now, does this mean it's going to guarantee profits? No, of course not. But right now, it is way overextended. It's nearly 3 ATRs above the 20 period EMA. And because of that, we don't want to buy it right now. Now, again, there are times where you're still going to end up with a losing trade, right? Nobody can ever say that you are going to have a 100% win rate unless you're just literally sitting in cash. But a lot of these, you could have bought any time when it's a green, in the green zone, in the value zone is what we're going to call it, and you could still end up being profitable. Like this one didn't work out, and that's okay. Because this one right here, you had 4 out of 5 opportunities in this big uptrend that went from May to July and still were profitable anytime you got in these value zones. Pretty cool, right?
We've got a plan for every situation, Chris. This is amazing. Great job.
Get a load of this guy following plans, backtesting, going over and over, almost like he might know what he's doing. I know. So that is the plan today, which is still tweaking on this indicator here. No twerking. We don't have any pants. We just have tweaking, no twerking going on. But because of this, I wouldn't be buying Qs at this point, right? It's really extended super high. Breadth is looking bad. I'm not touching anything right now. I'm just going to enjoy my cash, right? Do you sell when it's no longer in the zone? I think that was Steve's question earlier that I didn't actually get to. An exit signal? No. You don't have to sell when it gets out of the zone. Can you? For sure. That's up to you. But the plan is to hold it during long periods of time like this, right? This 97-day period right here. And there were probably great trades to make during that time. But if you're not in one of those trades, you could have loaded it in to one of these value zones right here and collected some extra cash in the meantime, right? That's the plan. Not necessarily a sell signal unless you want to make that part of your plan. Not part of my plan, not part of the plan that Scott and I worked on. Okay, so is the plan ETF only for those two ETFs? So you really have 4 choices, honestly. Your choices are Qs, SPY, TQ, or SPXL. There you go. That's your 4 choices on plan ETF. They are the market with or without leverage. There's your 4 choices. So you could do half in Qs, half in SPY, or like right now, the SPY we talked about earlier. Let's see if I still, yeah, SPY right now is over 70 and Qs is under 70. So in this case, if we were in the value zone, you could go all in Q because SPY is already excluded from the plan. SPY is already excluded from the plan. And for those in the UK, it's QQQ3. Good to know. And of course, let's go over the exit plan for plan ETF. And that is, if you get a sell signal, it's so easy. It's unbelievably easy. You get an outlier sell signal, or if you have a 10-20 bearish cross down. That's it. The plan is not to be in and out of this all the time. The plan is to capture additional gains, to capture additional alpha, rather than sitting in cash, sitting in FSCOV in the meantime. In the meantime, until we get new trades. Okay.
Really speaks volume against Mahesh and Mark's efforts. That the QQQ sell signal, according to the data, is stating that's really the exit you need to follow, other than the 10-20 cross. That sell signal coming on outlier is so valuable. That sell signal is the best thing we found so far. Mm-hmm. And everything that we're doing is trying to just make sure we don't jump out of a plane without a parachute. Like legitimately, that's it. But the sell signal is crazy, crazy, crazy good, which is great. So listen, I have a ton that I got to do today. I'm going to go ahead and bounce out of here. Joe, if somebody were looking to save time, make money, and start winning with less risk, what do you think they should do? They could click on one of these videos. One of those videos is probably covering up our face right now. Yeah. Here, I could do something like this. Like, yeah. Click up there. Click over there. Click up there. Thanks for hanging out today, Joe. And thanks everybody else for hanging out. We'll definitely talk soon.